Good morning, everybody. Welcome to today's
Good morning.
1Mby1M Strategy Roundtable for Entrepreneurs. 1Mby1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we do these free mentoring roundtables every week, week after week after week. We started in 2008 fall, and we've done, this is the 520th session. So as you can imagine, we've done a hell of a lot of roundtables. Over 150,000 people have participated in these roundtables. Our community today is over 500,000 people. This event is being recorded. Every single recording of our roundtables are available on our YouTube channel. You can find them at 1M1M Roundtables on YouTube. On Twitter, we're at 1M1M and at Romana. You can use hashtag 1M1M if you're live tweeting today. These are the call-in instructions. This is a roundtable, not a broadcast, so we would like you to call in and participate as much as possible. Not quite yet. We have scheduled programming first, and then we will open the line up for you to call in. So, coming. We are going to start today's session with a conversation with Rajeev Madhavan, founder and general partner of Clear Ventures. Rajeev, I've known for a very long time, and Rajeev has been here before. You may have listened to his previous session, but it's been a while, so we want to catch up. Welcome back, Rajeev.
Thank you, Srimana, for having me, and it's great to be here during these interesting times.
Yes. So let's catch up. What is going on right now with your fund, your investment thesis? How have things been since we last spoke? Let's level set a bit.
So we are about a $330 million venture fund in Palo Alto here. And typically we do the size of checks of around 200K to all the way up to, in the first check, we have written up to $5 or $6 million. In the rare exception, we have gone even higher than that in the very first check, right? So we can do very deep tech projects that take a lot of money, as well as some which are still in the very, very early stages. Pretty much everything we have done, out of the 19 investments that we have done, 18 are seed and one is a Series A. But we don't start with Series B, etc. We are very much the first, and I know a lot of VCs in Sandal will say they do seed, but when we say seed, there is no business plan. And many of these things gravitate from what it is to pivoting to a real product. So we're truly what I consider the first check. Not necessarily the first venture check alone, which probably sometimes is very much the very first check that goes into the company. Most of our investments, we have two which are consumer-oriented investments, or one which is a B2B, but B2B2C. And we have one which is B2C, but everything else is in the B2B enterprise class software with very deep technology focus, right? That is what we are very good at. As you know, the partners of this fund are people who have done these long investments either as venture partners or as practicing operators, people like me who have run 3-4 companies in Silicon Valley. So we think we are better in the very early stage than in the latter stages. In which case, money makes more difference alone, and nothing else makes as much of a difference. So we add a lot of value in the very early stages.
Rajeev, let's talk a little bit about the companies that you've invested in. Double click down from deep tech into some of the areas where you are seeing interesting companies, and talk us through what is it that's interesting, why is it interesting, and what's drawing your attention?
So let me kind of, out of the 19, 15 have announced their products. 4 are still in the stealth mode because they're new and just working on their product, and will be launching in the next 6 to 9 months, right? So we have in the 15, I'm just going to pick 2 extremes just to kind of give an example of different things, right? We have a company which is called Atmosic. It's actually a chip design. We have only 3 in semiconductor investments out of those 19. One of them is a semiconductor investment. It's a chip for Bluetooth communications. Bluetooth requires today batteries and an ARM processor. And so if you look at my headphones, if I forget to charge today, I'm out of luck. I have to put it back down and either scramble for another headphones and come and talk to you, Sramana. But this is a self-charging chip, meaning you put it anywhere and it sucks up RF energy from the ambient RF energy from the air, from the sources you put, and can charge automatically. So think about it, your IoT devices, your curtain right behind you. Every quarter or every 6 months, you are running around going to Costco or someplace buying a whole set of batteries and tweaking them in, right? So, well, this just stops you from having to do that. You don't need that. You have IoT devices, headphones, etc., where you just do not need to replace the batteries. First of all, it untethers a device from all the electrical connections that you need. And the second thing it does is give you the ability and the freedom of not being tied to a bunch of battery replacements that you have to go through. It's almost like, you know, painting the Golden Gate Bridge. Once you're done at the other end, you got to start from this end again today with batteries. And here you don't need to do that, right? You just absolutely have a self-charging environment. So that's on one side, one of our companies, it's called Mosaic, launched their product just weeks before COVID and has done pretty okay during the COVID stage, has raised a lot of financing during COVID, incoming financing, interest from suppliers who actually wanted to invest into the company, et cetera, and has gone through that process very nicely as they are building a sales force as we speak to go and channel all these products into the sales and into the market side. So that's one side, an extreme case of a hardware driven scenario. To on the other side, the last company that launched a product, which is I'm just picking two extremes just to show you. The last one is a company called Opsera. They are a DevOps product, and essentially what they do is most of the new products and new company things are created with a very good CI/CD pipeline and products that people need to maintain, manage, etc. So even if, as we looked at our own companies, we found that not all of them had great, development chops and ability to actually manage it. Many of these startups write their software in the first year, second year figure out that we never really had the right testing framework, right CI/CD framework, and have to go through and redo their products. Opsera completely eliminates that, provides an entire set of CI/CD DevOps tools, allows in remote scenarios like we are in COVID, etc., for me to manage remote employees, know where they're stuck, where they need help, where can I increment and improve their performance. All of those can be done very, very systematically and in an organized fashion. They launched their product about October timeframe and had their first quarter, did a $1 million kind of quarter range. So very, very proud of the team that during COVID, they again were funded just weeks before COVID, and right during COVID, they launched the product, and now, one quarter in, they have been doing extremely well as a team in delivering on this DevOps mission that they're on. So we have in between a lot of AI companies, AI applications. We don't do AI as a platform. We do AI use cases as one of the things that we fund as well. So we have in between that all of the can of worms that you can get, including a combinations of engineering scenarios where you have biology applications with AI making drastic changes and benefits to the biology applications. So that's the kind of range. We've done pretty much everything except healthcare that needs FDA approval, which we find it very, very difficult to do, just because being in the path of Uncle Sam is not something we want to be involved with.
So a couple of questions come to my mind as I'm listening to you. First one, in the battery company, how did you do technology validation in making this investment? What did the company come to you with, and what was your decision to assume that this team can build this technology, the product will work What is that decision predicated upon?
So in this particular case, this is David Su and Masood are the founding engineers of a company called Atheros, which I'm sure everybody in your audience know. They invented Wi-Fi, right? The first Wi-Fi chips rolled out of Theresa Meng's lab. David Su was in the PhD teams, and his work at Stanford was all on that space. So this is the guys who created Wi-Fi as we know it. They've been a customer of mine as sold products to them in my past lives. So I knew both of them or had heard of them, David and knew Masood before that. They came in for a pitch, in fact, got the intro through the lawyer again, just because, sometimes some of them are hesitant to call you back, even though they have met you in the past. So, the lawyer asked us, hey, Rajeev, if somebody wants to meet with you, we took the meeting. And I don't generally do semiconductor large chip investments. I've looked at all these AI chips, et cetera. We have passed because for a fund of $300 million to invest in companies which require 200, 300 million plus is not the right area for us. So the first thing I told David and Masood was chances of me investing are very low. But having been a semiconductor, entrepreneur, I'm happy to help you and work with you. And 45 minutes into the meeting, I said, David, I think I should invest in this. So it was like, started with a most likely it's going to be no, and I didn't want to tell them at the end. I just sort of started it very nice because we thought we're going to be passing on semiconductor investments. 45 minutes into it, complexity of the chip is big, but it's not very large. The team, it's a proven team that we knew could rinse and repeat on semiconductor design. And the problem, I empathize very much. I'm one of those gadget geeks who buys and puts everything, drives my wife and kids nuts because half the time the batteries are out. And I get a call saying, this is not working, Papa, that's not working, Papa. So I know the problem, just my own daily experiences. And when you talk to industrial IoT customers, you immediately realize where you are putting these things in pumps in different places.
I have no doubt about the problem. I think the problem is very obvious. I think it's more the technology it's complex, and I'm curious on how it works.
So,
anyway, that's
Sherman, I'm not getting into the technology. Most of the projects we take are fairly complex. Okay, and none of them can be done in 6 months, etc. And it's usually takes 12 months of a very conscious big team and experienced team in that particular space. And even if it's a founder who's not that, we look for projects which have a big differentiation on an ongoing basis, right? It's unfair to say that there's a moat built by anybody walking in as a startup on day one. A moat gets built over a period of time. And
sure.
But does this team have the capacity to build that moat? And what is it going to be long term is something that
something like this, if you can crack it at a technical level, that itself is a moat, and you can get better, that.
Yeah.
So this is a different caliber of company.
It's a bigger execution problem. I agree with that. And then it gets into the differentiation, right? So we spend a lot of time looking at these deep technical things where the differentiation over a period of time grows, and you can grow. And now that's one hardware company. In the software sides, we have companies which are doing a lot of things in security, etc. We look for that, whether it's software, hardware, system. It really does not matter. Whether it's deep tech.
AI, Rajeev, what are the kind of things you've invested in AI, and what is your investment thesis on AI?
So in AI, we have a company called Reflection, which has been doing AI for e-commerce. Today, when you shop in many of the websites, you and I would get the same web page where you go in, or you may get a small carousel where it says, Samana, people who bought this may have bought this other stuff, right? That's the level of automation. Whereas what Reflection does, the entire pages an entire experience, including search and all the tools and utilities on the commerce site is completely custom to Shramana. So when you type leather, maybe you've been looking for a leather bag and I've been looking for a leather shoe. It kind of completely changes the aspects of the page completely and is curating pages on the fly. And it's sending me and you differentiated web pages, differentiated emails, like maybe Shramana, the best time to reach you on email for these things is 6 p.m. Maybe for me, it's 7 a.m. It learns all that. It really figures out all of the entire platform of what needs to be done. Is completely curated, automated as a service. So you don't need a very large team to do all those things in e-commerce, right? That's on one end. We have companies which are doing e-commerce for security. We have companies which are doing e-commerce for biology applications. So lots of different things that apply, which are applied AI use cases that we look into.
And what aspects of biology applications are you going after through your AI companies?
So, I mean, we've not announced products, but if it's fair to say, you know, DNA sequencing, et cetera, and doing AI stuff, very well known. Now there's a significant breakthroughs and significant cutting edge RNA, which talks from the DNA to the protein side. That's also being done very well. The next research, there's a lot of things that can be done in protein. I cannot talk about the products because the company has not announced the products, but there is a lot of work on applied AI in those side. A lot of things that applies on different segments, and more importantly, the whole of biology space. I mean, we've seen applications from blood flow being measured to different things that completely changes the way you know, we do the testing of things in AI, testing and development of tools and solutions for the tools to do that, right? Basically, this is an area where we are looking at, but we are looking at very much at the intersection of biology and AI applications, not just biology applications that we're not good at getting into.
You know, one of my thesis, based on what I'm observing, and you may have read some of my writings on this, is the whole platform as a service trend that is emerging and picking up actually. Well, Salesforce had started this a long time ago, quite early in their journey, and built an enormous business, not just on the application side, but also opened up their platform, and a lot of great companies have been built on that platform, including stuff like Viva and Velocity, and that Salesforce bought later, etc. That playbook is being picked up by other people, and there are other platform ecosystems that are emerging. And I've talked to a lot of people, including a lot of AI founders who are building one application area currently, but clearly see that in a medium-term window, they're going to follow a path strategy. Comment on that. What are you seeing in your orbit?
So it's very interesting you raised that. We have a company in that space called in using platforms as a service in some form or shape. We have a company called Robin.io, which has been extremely successful now, powering telco for you know, vendors like Rakuten. So Rakuten has brought up a 5G network, native cloud. It's all powered. Their RCP uses Robin's technology underneath it, and Robin's platform and platform as a service underneath it to actually build the RCP platform, right? What they have done is they have, in this particular case, it's using, you know, the trends that is happening with respect to Kubernetes, but Kubernetes in itself is not the differentiation. But the fact of the matter is it's becoming a commodity. Google has got Anthos, you know, AKS from Amazon, lots of Kubernetes aspects of things. But how do you apply Kubernetes with a storage compute in a hyperconverged manner such that I can provide all the networking requirements of running a job on-prem, on cloud, starting a job here, being able to manage it on any cloud, so that I'm not beholden to one particular cloud alone. I'm completely free to be able to make that changes based on whose cloud is best for me for that particular application. So they provide a platform as a service for that. It can be hosted on-prem to any solution, and you can actually run that anywhere. The company has been doing extremely well, has been growing dramatically. I mean, doubling every 6 months or so in revenue and getting out there and growing over the last 3 years has been very good. So it's no longer enough to provide a set of solution or a set of products. You have to provide the entire platform as a solution. I mean, Salesforce was the first to innovate. I mean, I was one of the first customers when I was at Magma deploying Salesforce. We had the same VCs as Salesforce, so I had no choice but to use it. Mark Perry, and then he asked me to use it. And so I was one of the first, I believe, the first customer at Magma. But we ended up realizing that we could build a lot of things of our system around it. Our entire company operations back in 2001, 2002, we built on Salesforce. And if you realize that kind of power on a platform, Mark and team obviously focused on not providing the engines inside the platform, but the whole platform as a service from day one. And I think this is something that every entrepreneur should look at, right? It's not the code I provide and I sell that code in some executable form. It's the whole aspect of how do I increase the usage rapidly, and how do I actually amortize the value of the maintenance and value of all of that in a SaaS kind of platform. Because SaaS has got a great advantage that it's a recurring revenue. It's a very beautiful model, but it has a very big disadvantage that if you do a bad job, the customer can go away in a year because it's a year commitment. So you really need to make sure that your service is phenomenal. And this is why, if you're doing that kind of phenomenal service, why not offer all of that service as part of the platform and provide a value-added solution rather than just the platform and some code aspects of things.
And there are, various nuances to the strategy, to developing a fast strategy. There are players like ServiceNow, for instance, who do have a platform as a service product, but they are basically working with large enterprises and, workloads within the enterprise, and they're working with the system integrators. They're squarely a large enterprise facing strategy. I also really like how Salesforce.com activated a lot of startups on top of their platform. Like the Viva story is an incredible story. I've known them for a long time, and it's, it was basically Viva built this company for $4 million and delivered $600 million worth of revenue and, multi-billion-dollar market cap. This company had raised other money, but they didn't really need it. So because they developed on Salesforce's stack. And I really like capital efficient companies. So the vision of many of these different SaaS ecosystems emerging in different use case areas, different genres, whether it's supply chain or manufacturing or DevOps or, various different areas, different ecosystems emerging on different platforms and enabling a lot of ISVs to take the use cases further. This sounds like a phenomenal forward-looking opportunity to me.
So Shramana, I think, every platform when it starts out, you don't have the APIs and integration that startups and others could build on, right? Because you are barely a startup. You are trying to get your first sales, right?
Yeah.
But once the platform becomes beautiful, then there's going to, if done right, there's going to be an ecosystem of applications around your platform. That's when you have truly succeeded, which is when Salesforce succeeded, when they could open up. And now there can be a repertoire of companies that come around it in various facets. It's not going to be just the internal teams that will do it, right? And this is an opportunity for founders, and this is an area where you can do it with less money, and get to a certain point, and it depends. I mean, there was one at 600 million. There's many which are then sold at $3-4 million, $2 million, etc. That happens, right? There's nothing wrong in doing that, right? It's ultimately every entrepreneur has to know where are you? And based on that, determine how much money do I need to raise. If I'm building that entire platform from scratch, I'm going to have to do a lot more of heavy lifting than I would have if I'm building on this stack. So these are the kind of questions. By the way, this was there in the early days of Silicon Valley too. I mean, I remember in EDA, which is one of the areas that I've done well as an individual carrier. There were all these companies which built things on top of somebody's tools and got bought by that company for 50, 60, etc. And all they have done is $1 million of raise from a few private investors who have been in the space or have been in the semiconductor space and loves the products and loves the idea of that product, so helping them reduce their workload, right? And if you look at that space, Andy Bechtolsheim was a big investor because he was doing a big chips, and he would put his money to help get rid of all the issues that he sees in that space, which were around the existing set of tools. So you need to, and the same applies, except now you have a lot of investors in Silicon Valley. So your ability to get that small level of funding is much higher. It may not be VCs like us. I mean, we may occasionally do that because we want to. It may not be even for returns that we do those investments. We want to build relationship with entrepreneurs in general. So if we find somebody who's doing something, it's going to be what I call a drive-by shooting. I mean, basically you're going to get something done and you're going to get an exit. We would invest in that founder because we have a hope that that founder will do something that's more in our sweet spot in the next life, right? I mean, and you know, anybody who's done a startup never ends. It's basically you become a little bit unfit to work in a big company for a long time. So you sort of want to make sure that you are, as a venture capitalist, beholden and friendly to them and work with them. So we do those investments, but it's not very common that we do that, right?
No, but I imagine that you would invest in companies that would start with one use case and then broaden into a full platform and API ecosystem as they go on. Those are the venture scale companies. So there will be probably, a few hundred venture scale platform companies, and then there are going to be millions of small companies building on top of those. That's, I think,
But to be fair, when you have this kind of 300 million plus fund, you end up not being able to write, those very small lots of investments, right? So what we can do is only if that entrepreneur is exceptional, would we write it in the hope that we can win his next business, the next startup, right? That's what we would do. But I'm telling all the entrepreneurs on your audience that there's a lot of people with lots of money in Silicon Valley who know the problem, and you can raise money not from traditional venture capital as a commodity. You can raise it from people who understand the space, or your users, or entrepreneurs who've done things in the usage space of your products, who does a bunch of seed angel investment, because the investment needed when you're building on a Salesforce platform is much lower than what you would need if you're building it from scratch. Different thing.
Yeah. We are actually interested in partnering with the companies who are trying to build these ecosystems and use our influence in the startup world to kind of help with those building those ecosystems, because you need all these things that we have, brought together as a virtual accelerator to accelerate those ecosystems. So I'm very interested in finding those trunks that are going to become the hubs of these ecosystems.
No, I think truly the world is what COVID has shown is you could be in any part of the world.
Yeah.
And so, being able to do that and work on it, and as an entrepreneur, it's not just the size of the company, and it's depending on where you are in your stage of career growth. So you may start with something small. Some may actually start with something which is very crazy and big and really takes a lot of venture financing, in which case, the thresholds of what you need to raise, how you need to be able to do that is all very different based on exactly what you're trying to achieve.
All right. Well, Rajeev, I know you have a meeting. I think your assistant has notified that you need to drop off. So thank you for coming. We will catch up after COVID in person, yeah?
Thank you, Sramana. Look forward to it. Thanks.
Bye-bye. Take
Bye.
care.
Bye.
All right, folks, we're going to listen to some entrepreneur pitches. I will take questions after the pitches, okay? So hold your questions. You can start putting in your questions. I'll answer your questions after the entrepreneur pitches are done. So these are safe working sessions. You don't need to be worried about, you don't need to be nervous. You don't need to be defensive. We are on your side, and our only agenda is to help you deal with the roadblocks you're facing. If you disagree with me, that's fine. It's your venture. You will do what you want. Just listen and decide what you want to do. So, Filip, you are first, and you're here in San Francisco.
Yes, thank you, Shamana, for giving me the opportunity to talk today. I'm living in San Francisco at the moment. The fun thing about me is that I came to the United States on a similar program that I'm going to be telling you right now about. So, when I was 19,
Where did you come from?
yes, excuse me?
Where did you come to America from?
I came from Macedonia. So
Oh.
I was born in Yugoslavia, raised in Macedonia, went to school in Bulgaria, and I came on a student exchange program called Work and Travel USA. It's a program that allows you to work for 3 months in the United States, and then the fourth month you travel in the US, and then you go back and you continue with your studies. So I was fortunate enough to take all of my exams in advance and to apply for this program. Then I got accepted, and the only thing why I chose San Francisco is actually not because of the city or the culture or Silicon Valley. It was because they offered me to work in a chocolate factory. Now, I'm crazy about chocolate. I'm totally addicted to chocolate, and I didn't even want to see anything more. It was like, that's it. We're going there. I Googled, what's San Francisco? What is it about? I only knew about the Golden Gate Bridge and Alcatraz, so didn't know much. Came over here, was fascinated about the city and everything around me. After the third month, we traveled. The fourth month, we went down to LA, went to Grand Canyon, took a lot of photos, went back home, and I told everything to my friends. I was like, guys, whatever we're doing, we should stop doing this. We should organize each other to go on this program. Well, believe it or not, the next year, my friends listened to me, and we came 7 of us. We loved it. We went to Hawaii. We went to the East Coast. It was the time of our dreams. So when we went back home, what do you know? Next year, 15 friends of mine wanted to join the program. The exchange body, the organization that was sending us, they saw this big potential in organizing people from the other side of the world, and they put me as a coordinator of the student exchange program. So the fourth year, I brought 55 people from Southeast Europe, Macedonia, Bulgaria, Serbia, and Romania. We were over here with my best friend. He was organizing the accommodation for everyone. I was organizing the sending of the people and introduction to the United States, the culture, and everything else that they needed to know over here. It was amazing. We were all staying in one hotel, 22 rooms, a lot of sleepless nights and great parties. They didn't invite us the next year to stay in the same hotel, but definitely the program stayed in my head even after I graduated. Then my best friend, he sponsored my visa, and I was able to come back and live in the United States. San Francisco is definitely my top choice and the best city in the world to live in. So, following my dreams, I wanted to do something in the travel industry. I opened a free walking tour. My free walking tour in 3 years, it became the best free walking tour in the United States and second in North America. We also run the first and only for now Spanish free walking tour. And we had more than 30,000 people joining our tour. So um, what I wanted to continue doing, and definitely after the pandemic started, was to do a monthly travel experiences. And there was one podcast that I was listening to you, and you were exactly explaining that how things will change and the work from home um, environment will become even bigger, and people would like to travel more after the pandemic is over. So that really aligned with everything that I was imagining to start doing. I called it Live MOMO, and it's for monthly experiences targeting young professionals that work fully remote and want to travel on monthly basis. This travel program is offered through their companies. In this way, we will form a bridge of trust and transparency between the companies and their traveling employees. We offer a solution from which both of the parties can benefit. With the post-COVID work from home concept, there is tension between employees stuck at home and companies struggling to make their employees more productive. And if a company offers this program to their employees, it could be a great perk that will motivate employees, make them happier, which may result in doing a better job and be more productive. So over here, I put a small customer validation. Oh, I forgot to tell you to change the slides. Yes, we're right on the slide that we need to talk about. So if the company starts today, I have the ability in 3 months to raise 10 companies that can on average send 5 people. That would be total of 50 travelers or a monthly revenue of $60,000. If that would grow to 6 months and 30 companies, then let's say that the applicants that will come back, they're going to also tell their friends and maybe more people would like to join. So if there's an increase of the average applicants per company of around 50%, then the total travelers will be all the way up to 240, which would make the monthly revenue of $288,000. In 1 year, this can grow into 100 companies, offering 10 on average people per company to go, and that can make a total travelers of around 1,000 people, or a monthly revenue of 1.2 million in annual revenue. There's a program fee to join this program. It's $500. That's non-refundable. That goes for the people for document check, background check, bookings, transportation, and other organizational and time-consuming activities. And then the average deal size would be around $1,200 a month, which they have to pay the first and the last month of the program. So the assets or the strong side of my strong side is throughout the 5-6 years of experience that I have in travel, I've gathered more than 18,000 emails, and that's a small community that I send out newsletters and keep in touch with them. When the pandemic started, my organization totally was in the space with no work anymore because the whole travel industry collapsed. So I turned to my community, and we made a fund for the company, and in less than 48 hours we managed to raise more than $6,000, which tells me that the product or the quality of the service that I was providing, and also the connection with the people that we had is still there, and they definitely wanted to see the product stay even after the pandemic.
So Filip, I have a few questions here. These companies that you are thinking of offering this facility to are based where? They're in the Southeastern Europe?
No, so the companies would be based in the Bay Area in California. Those are
where are these people going to be traveling to?
They're going to be traveling to exotic places, beautiful places around the world.
And have you talked to 10 companies, 30 companies, 100 companies and validated this?
I have talked to around 20 companies from friends that I have working in those companies, and I've noticed that there's a very big gap between or a gray area between people that are now working from home and would like to travel, and the company knowing about their employees that are traveling. So I think that this is the area that I would like to place the company, to be the bridge between them, to be able to get a transparent to make it transparent, the travel of the employee, where he is, and the company to feel safe that their employees are on a safe place, that the information that from their computers is on a safe network, and at the same time, if it's a small startup, they can even use their employees knowing where they are at the moment, to make networking for them.
So who's paying? Are the companies paying the program
No,
fee, or the employees are paying the program fee?
no, the employees are paying for the program fee. The company is there just to give a green light and to give this as an offer, as a perk to their employees. So, for example, if you start working in a company, bookkeeping company, that you don't even have to be at home or in an office, you don't have to be in an office, then the bookkeeping company can be like, hey, you know what? If you start working for us and after 3 months we establish a good working in connection with you, we have this program that if you want to, you can travel around the world month-to-month basis, and have these experiences anywhere you go.
And the program fee is, there's other fees on top of the program fee, right? If somebody has to go stay in a hotel for a month, there are charges for that. There's food and all of that. So you have factored all of that in. So what is your assumption about what does it cost for an employee to do something like this in another place?
In the monthly package, it will be included different activities for that month. It will be included the accommodation, of course, transportation from the airport to the location where they're staying at. It will also include flight tickets from one place to the other. So, for example, let's say an employee gets this program for 6 months, and the first stop is the Maldives, and then after that he wants to continue to Sydney. So the transportation from the Maldives to Sydney will be also included in the program, but it will not be included.
$500? No.
The program is $1,200 a month.
Oh, I see. $1,200 a month, you think will cover everything, the flights and the hotels and transportation?
Yes. So from my experience, I know that if we book everything in advance, and if it is in bigger numbers, that we can even get it for a cheaper price than just booking it on place at the same time. Also, if when this starts working, we can make deals with those hotels or even apartments that to be able to have them available for year round. So in that way, we stimulate the hotel industry. We're giving them pretty much, we're renting their rooms per month or even on yearly basis. And same time, we have stability on our side that those places would be always available to us for an affordable price.
All right. So, Maureen, can you share the post-COVID startup idea that I wrote about? This kind, very similar to this, but it's a B2B idea. So I don't know if you read this, Filip. I published a bunch of post-COVID startup ideas, and one of them is facilitating travel experiences.
Exactly. Yes, because of that idea that you posted, that's why I contact you because it is exactly like that. And this is also a business to business idea that it will be, through the companies. At least that's how I'm planning on doing it. Will the companies finance it. I don't think that many companies will finance it. It will be financed individually. But maybe big companies that have a budget for their employees, maybe they can
Which is
also.
why I was asking you, what validation have you done?
So my validation is based on the employees paying for the program. It's not based on companies paying for this program. And I feel that like if for this to work, best is first to get on board people, like I call them ambassadors, in those places, vacation places, that they're going to organize everything. We're going to be working closely with them to be our host for the travelers, and after that, uh, after everything is set, we're going to make deals with the companies. So the third step, it will be the employees from the company going over there and having the experience.
Yeah, well, it all depends on what is the customer acquisition strategy that is going to scale. I think, obviously, since I wrote about this idea, I'm a
Yes.
believer in this mode of travel and remote work and all of that. There's quite a bit of complexity in scaling something like this, but I don't see why it cannot be done, and all those workflow elements of scaling this cannot be worked out. So I think remote work will be very big. I think it would be wonderful. The more of this ecosystem, the more this ecosystem develops to support remote work from faraway places, and there are countries that are doing remote work visas and trying to attract these kinds of population. Greece is trying to do it.
Yep.
Various countries are trying to do it. Italy is trying to do it. Vermont is trying to do it within the U.S. So I think this is, this is a very, very interesting area for me. And I have always loved to travel. Even as a young person, I used to travel a lot just to see the world and develop those experiences and perspectives. So I think for young people, this is wonderful. But not just young people. I actually think even families who want to raise children in multicultural environments, giving them exposure to multicultural experiences. It has many different aspects to it. So
Yes.
will companies want to take over some of the travel expenses? They may. I think that is something that needs to be validated. But I'm very, very positive about this idea, obviously. So you're kind of preaching to the choir.
Well, to be honest, I mean, you were my inspiration to start doing this, and encouragement that this actually can work, because it was coming from a professional that knows the industry and knows what they're talking about when they're starting a business. And I was like, maybe it would be good to reach out to you for some guidance, since you think that this
So
would be a
where
good
are you
idea.
now?
Yes.
What's the situation currently?
I'm living in San Francisco. I work for Tesla.
Okay.
I'm a designer. I engineer designer, right? Nothing connected to tourism, but that's definitely my passion and my what I breathe every day. And when things were normal, I would be usually traveling most of the time. But now I usually work on a 9 to 5 job, and after that I develop idea concepts. So I'm planning on staying in the travel industry, or at least I'm gonna give all my best to stay over here and to develop something that it can work in the post-COVID era, because I believe that
Philip?
after there will be a big opportunity. Yes.
Yes. So we have an entrepreneur, an experienced entrepreneur, who is developing this concept within 1Mby1M. So he is in the process of validating this concept based on my idea. And he's done a startup before and sold his company, so he is a bit older than you. If you like, we would be happy to introduce you to him, and if you want to, join hands with him, because it's always better to have two co-founders than one co-founder if you're looking to raise money and so forth, if you want to just develop the business and can bootstrap your way to traction, that's different. But if you wish to raise money, investors
Yes.
typically are looking for two co-founders. So do you want to be
I would
introduced
love
to this
to.
one?
Yes,
Okay.
yes.
All right. So Maureen will introduce you to Abe. And Maureen, could you ask Abe to listen to this conversation recording and then connect Filip and Abe, and maybe they can join hands and build this concept. Very good. I'm very happy to
Thank you
see you
so
and
much.
that you're here. I think your energy is great. You have some hands-on experience in the travel industry and lots of
Yes.
useful energy. So I think Abe and you could find something very interesting to do together.
Thank you, Shamana. I'm looking forward to the email and looking forward you mentoring us and raising this idea from the ground and making it maybe the next unicorn.
Terrific. I look forward to it. All right.
Thank you.
Very good. There's another one, another pitch before we. Ooh, what is this? This is Dhiman's company, is it?
Hear me?
Yes, we can hear you.
Yes, good morning. This is Dhiman from Kolkata.
All right, go ahead.
My business is in the food industry. I was listening to your discussions with Rajeev, and it was all high tech. Mine is very much on the ground, and it is a food industry wherein I have started Sousake as something which is, well, in the food industry there is a lot of competition, but the segments that we work in, basically soups, salads, sandwiches, and kebabs, is basically not available so easily in India and in Kolkata presently. You have people who are serving the daily meals and things like that, but with the new health conscious public being there and people working from homes and having no time to cook and things like that, a quick lunch or a quick bite is always welcome. With that in mind, I started Sousake. We just started about a couple of months back, and it was totally bootstrapped. And I'm very happy to say that we already have about 50 customers who are very dedicated. We have daily sales. I work out of my home. It's basically, I am the main man. I am the chef myself. I have a helping hand. I have a delivery guy. We don't depend on third-party operators. We have our own delivery team. And it's all, so far the traction, as you call it, has been very good. We have got many repeat customers. In fact, most of my customers are repeat customers. What we are having a problem is with the funding, as in terms of being seen by other customers. I mean, unless I am sort of visible to other customers, whether in be the social media or with the print or visual media, I just cannot be. I'm not being able to increase my customer numbers. I have bootstrapped this unit, and well, in Indian terms, it is quite a lot of money for us, but in US terms, it is nothing. But still, at this point of time, we are going ahead on our own steam, looking forward for funding to develop outlets throughout the city. And that is just one part of it. But actually, the real story is behind this. You see, India is an agricultural country, basically. There's a lot of agriculture going around. Our family and people, relations, and people like us, they have a lot of land in the villages which is lying unutilized. A lot of people are not interested in agriculture. And you must have read in the papers all this agitation going on and things like that, wherein the farmers are not getting the price. What I propose to do is, on my own land or on others who are willing to participate with me, do a sort of, they buy the products for the entire year or so, but not not in that particular manner. In the sense that I would like to have, what we call collection centers at all these places from where we intend to buy the products. And on a daily basis, we would like to buy the products and offer a price, at which price, if the farmer is willing to sell, we will sell, take it and bring it to our city and maybe use it for Sousake, or sell it as a packaged product at prices which are very affordable. See, Sousake, the main aim of Sousake, the idea of Sousake was to basically bring global cuisine to customer doorsteps. I mean, we are already serving European continental stuff. We are serving Asian stuff. We are serving Indian stuff also. Uh, the prices we charge are ridiculously low, but the quality is absolutely the top of the line. Our packaging is also top of the line. We have branded our entire packaging system in the sense that the wooden crockery or the napkins or the delivery bags or the packets, everything is branded with Sousake. So it has sort of, that is basically the idea, to go in for a backward integration where I can get the stuff right from the farmers. What would that mean is that I would get price
so
at price.
Dhiman, I think I understand what you're trying to do. This is not in a fundable state. At this moment, you cannot raise funding for it. There is a whole series of steps that you have to take to turn this into a fundable venture. And you are far from that. So my recommendation is you start learning what it takes to be a fundable company first.
Okay, we'll do that.
And I think what you should do first and foremost is 1M Basic, which is our curriculum-only program, where you get a digital curriculum to study. And I would strongly encourage you to study that as quickly as possible, at least the core curriculum, and get a sense of what it takes to become a fundable company. And you can do that over a month, 2 months, 3 months, depending on how much workload you have to keep your business going and how much time you can spare to do some studying. And then you can, after you have a sense of what it takes to get a company like this funded, then we can talk about, how you want to position this. This thing is not positioned. This is a very, very crowded market. In India, it's a super crowded market with the Swiggies of the world and the, all kinds of things out there, people whom you're going to be competing with, and how you differentiate, how you achieve market share, how you acquire customers, what is the customer acquisition cost. There's like a whole lot of stuff that you need to be able to, articulate in a differentiated, defensible manner, without which this company is not fundable. So you start studying and start learning, and then, as you take baby steps, meanwhile, keep your business going, keep it organically growing. If you have been able to acquire 50 customers, I imagine those 50 customers can talk to another 10 customers each, and you can grow from 50 customers to 500 customers. You're saying that you have bottlenecks in your operational side, that you cannot serve more customers. Well, try to figure out how to address those bottlenecks in a bootstrap basis. Right now, you don't have a choice but to bootstrap until you can position this in a way that is fundable. It's not fundable currently.
Okay. Thank you.
Okay.
Got it.
You're welcome.
Yeah. Thank you.
You can, by the way, raise money from friends and family. This is a stage where people generally raise money from friends and family. So look in your friends and family network and see who is willing to, support your venture. That's the way. That's the way to mitigate this gap right now. Professional investors, the kinds of investors we work with, you're not ready for.
Okay. Got it.
All right.
Thank you.
Okay,
yeah,
so I'm actually thrilled to see both of you and both of your ventures. Both of these are, areas that I really love. I love food. I love travel, and I love Kolkata because I'm from Kolkata. So I know Kolkata has a huge tradition of food and cooking and cuisine and all that. So anyway.
Yeah. Very nice talking to you, Sramana.
Sorry?
Very nice talking to you.
Very nice talking to you. Yes, good luck.
Good luck. Thank you.
All right,
Thank you.
If you like what we're doing here, as you can see, I give very direct feedback. Where there are gaps, I'll give you direct feedback to, and the direct pathways on how to fulfill those gaps so that you can take the next step. If you like this approach of cut and dry feedback, not sugar-coated, not giving you lots of pats in the back and telling you, you're doing great when you need actual constructive feedback on how to move forward. If you like this approach, please go and tell 10 other entrepreneurs in your network to come in and use the 1M1M resources.
Yeah,
everything is at 1Mby1M.com. We have a terrific blog. So that blog is for free, and you just by reading the blog, you'll learn a lot. A lot of entrepreneurs over the years. The blog has been around since 2005, so 16 years. Over the years, many entrepreneurs have learned what they needed to learn just by following the blog. So that's a perfectly fine option. You can also learn using the Entrepreneur Journeys book series. There are 12 volumes of case study-based books, 12 to 16 case studies each. These roundtables happen every week. This is the 520th roundtable. The full acceleration program, which some of you are already part of, I see Alain here, Alain Moisson. He's already part of the premium program and others. This is our full acceleration program. You get access to the curriculum, you get extensive methodology guidance, you get business development support, strategy consulting, and similar roundtables, but they're private members-only sessions. And you also get help with financing and media relations. Go to the 1M1M self-assessment. That's where you will get the due diligence questions that investors will ask you. Be sure to try to answer these questions before you go to investors. Do not get knocked around by investors without being prepared. You don't get meetings with investors that often. So if you want meetings with investors, if you get meetings with investors, you better use them well. The bootstrapping course on our website is a very good place for you to start to understand the philosophy of 1 million by 1 million. And if you're getting stuck on the self-assessment questions, use 1M1M Basic, as I advised Dhiman. There is a whole lot of learning that most of you need to do, and that you will achieve by studying the curriculum. Please study the curriculum as much as possible. Then you have the premium program. Well, you can dig around on the website, the premium, the basic, what to expect from each of those, FAQs, video FAQs, full description of the curriculum. It is a case study-based curriculum. We emphasize greatly on case studies and playbooks, so you can learn from other people. Alain, for instance, is trying to do something in selling blinds, apps for selling blinds. Well, we have a great case study of blinds.com that did very well in that space. In niche e-commerce, that was a very interesting company, so let's see what we can learn from that, and so on. So we have, philosophically, we very much believe in standing on the shoulders of people who have done it before. We have very specific investor introduction policies. So if you are joining the program in search of investor introductions, please go through this page. It's accessible from the homepage of our site, 1M1M.com. Study the instructions, the policies, and you make your decision whether you want to join or not. Our methodology is lean, capital efficient bootstrap startups, and we use the bootstrap first, raise money later philosophy. And there's a mantra that we believe in firmly, which is do not go to VCs as beggars, go as kings. This is a very important philosophy that we follow. That's pretty much it. We have free roundtables all through March. Next week, we don't have a free roundtable, but otherwise in March, all 4 weeks, we have Thursday morning roundtables. And we are now ready for questions. You can turn on audio from your online connection already, from your computer audio, or you can also dial in. Either way is fine. If you have questions about the program, you can also contact Irina Patterson, irina@1Mby1M.com. That is pretty much it. By the way, this testimonial is from Freshworks, which was a company that was in our portfolio right from the beginning for 3 years. I just saw that they have crossed 300 million annual recurring revenue run rate, which is a very big milestone. The company is getting ready to go public. It's the largest company that has emerged out of 1 million by 1 million. All right, folks, let's see what questions were coming up while I was doing the rest of this session. All right, I don't see any questions really, as I know, Alain, you are using the program very intensely, so keep doing that and keep validating your idea, and I'm sure we will get to the answers that you're looking for just by following due process. I think Alain is asking some questions to the audience that you may or may not want to engage in.
Oh, can you hear me?
So, anybody? Yes, who is this?
This is Alain.
Hi, Alain.
I have one question for you. A long time ago, I thought about something like an avatar, that would hold all your body measurements. Because when people buy clothes on the internet, most of the time it won't fit. The Chinese measurements are not the same as us.
Yeah.
It's a very big mess. So I don't know.
Yeah, that idea has been around for a long time, and many people have tried to do it. So if you want to pursue that idea, you should go research what has happened before and who's doing what.
Yeah, it's a uphill battle. I know.
Yeah.
It's just an idea I had. I have many I'm an idea man, I guess. Well, I won't hold you much longer.
Don't get distracted by too many ideas. Focus on one idea and go validate it and
Yes, madam. Thank you very much for your time. I have to go now. Bye.
All right. Any other questions, folks? There are other people in the room, but I don't see other questions yet. There's many other people in the room. Nobody has any questions? You may want to introduce yourselves if you like. We'll always love to hear where people are coming from and what brings you here. It's a good networking opportunity also. Anybody? If not, I'm going to wrap up and let you guys go on with your day and do the same myself. I will see you in a couple of weeks then, okay? Bye, everybody. Thanks for coming today. I hope you enjoyed the show. Bye.